My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just to educate, but to teach you and entertain. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. I got to tell you, we got some real strange leadership this year. When you look at the quiet winners of 2025, the ones that don't belong to the Magnificent Seven, the ones that are unsung, even as they got us where we are so far this year, it's a real low-key hodgepodge. Some are from yesteryear, others are invisible. So others go up incrementally, but you never think of them. They're the exact opposite of the giant stocks that we've gotten used to talking about every day. So on a day when the Dow dipped 126 points, the S&P advanced 0.36%, and Nasdaq actually gained 0.51%, why don't we take a gander at which stocks have led the Dow Jones Industrial Average higher? Because it's the biggest and most visible index, stocked with story companies that often don't get much airplay, and very representative of what might be the new old leadership. Well, let's start with the year's biggest winner so far, 3M. This once fabulous conglomerate used to have new products that either created entire markets out of nothing or beat incumbents and became leaders. But then 3M got caught up in forever chemical lawsuits that wouldn't go away. I was appalled, by the way, at the disclosure of these because they were buried in footnotes when a former CEO retired. Then the new CEO, Mike Roman, came in. He inherited those lawsuits. They consumed his reign. He managed to settle what looks to be all the major ones, announced the spin-off of 3M's healthcare division as Solventum in 2022. Now, I actually kind of wish he hadn't done that because that was a great business. But I was glad he took away the existential risk to this story company. Now, in May of 24, Bill Brown, former CEO of L3 Harris, took over 3M. This guy's known as an incredibly tough hombre, a guy who's in a hurry to get things done. I think that the old 3M, one that my father once worked for, is back. I await the innovations that will remind me of the halcyon days when this company used to be known as Minnesota Mining and Manufacturing. In the meantime, Wall Street's getting reacquainted with 3M, and the market increasingly likes what it sees. I know, I got to tell you, I think it's terrific. Now, second, there's JPMorgan. JPMorgan stock is way too cheap, people. At 14 times earnings. This is the premier bank of our time, for heaven's sake. JPMorgan it's got the biggest M&A and IPO businesses. It's got lending. It does everything. When you put it all together, it does very, very well in a slow rate cut environment. Exactly what we have now. I think JPMorgan could trade up to more than 20 times earnings. Now, of course, there are other banks that have single big practices. Goldman has the biggest M&A. Stay with me on that. But when you put them all together, it's JPMorgan, and to get that for 14 times earnings makes no sense in the world to me. Next, IBM. All right, this one's a bit of a shocker. Many missed it coming. What you had to be watching were the integration of Red Hat, a powerful enterprise software platform bought a few years ago, the spinoff of their old IT infrastructure business as Kyndryl, and the conversion of a once big hardware company into one that gets more than 40% of its business from recurring software revenue. Those moves have transformed IBM into a company with much more consistent earnings, and Wall Street's always willing to pay up for consistency. Most investors had left this one for dead. It didn't die. In fourth, another banker. The one I just mentioned is being great in M&A, also IPOs. It's Goldman. Goldman is the Prometheus Unbound. Under the previous president, Goldman's most lucrative business, M&A, went fallow, tied to a rock with an eagle eating away its liver every day. That's Prometheus, by the way. That's a kind of a Greek mythology figure. Now, the eagle here is Linda Khan. She was the former FTC chair. Now, though, traders are betting that mergers are back and Goldman will have a huge spike in business. Meanwhile, with less regulation under Trump, we're also likely to get more IPOs. That's also great for Goldman. But the stock trades at a meager 14 times earnings. That's ridiculously low, given that this company's about to have its strongest moment in years. It's why we have been buying it aggressively for the trust, which you can follow by becoming a member of the CNBC Investing Club. The fact is, it's been ages since people thought of Goldman or JPMorgan as growth stocks. The Biden administration was not exactly a friend of the financial industry. For better or worse, they no longer have to worry incessantly about the SEC or the FTC or the Justice Department. Those days are now over, and you can see it from the strength in their stocks. That's what's propelling it. Fifth is Amgen. And this one has so many blockbuster drugs, I think it's absurd that the stock, once again, sells for nearly 14 times earnings. The flagship drug is Repatha, which is the best medicine to lower cholesterol. They have studies showing that any amount of cholesterol is bad. So the sales just keep going higher and higher. Why isn't Amgen better known? I think it's because people don't know about its amazing anti-cancer franchise. When the company brings its weight loss drug, Maritide, to market, I bet that people will finally sit up and take notice. In fact, many clued-in people have already spotted it, hence the recent gains. Maritide looks like it helped you lose weight as much as the majors, but unlike Ozempic or Mounjaro, it only requires a once-a-month injection instead of once a week. Nobody wants more injections when they can have fewer. Number 6, Walmart. Okay, well, this one isn't hidden, all right? Everyone knows them as an inflation fighter, a company with cheap but quality private label goods and a surprisingly great clothing department. My daughter outfits herself from Walmart and claims that you can buy plenty of stuff there, similar to what they have on Madison Avenue, 10 times the price on Madison Avenue. Here's one that drives me crazy, though, Visa. This stock and its doppelganger MasterCard run payment networks that take no risk and make billions. Everyone wants to buy now, pay later. That's what they want, right? You want the buy now, pay later outfits. Hey, look, Affirm is up a lot. Not tonight. It's a great company. But a lot of people, I think the big institutions want the Colossus. They want the Kings, the credit card companies that can do no wrong with no risk. And those are Visa and MasterCard. Next up, Amazon. Now, they reported a really great number tonight with better than expected sales, up 10% year over year, monster 37-cent beat off a $1.49 basis. Top line beat was driven by the core e-commerce business, with the company calling this past holiday season the most successful yet for Amazon. But all three of the company's segments beat operating income expectations for the quarter. The stock's trading lower in after hours, though, in part because the company's AWS business missed revenue expectations in the quarter, mostly because the company guided very conservatively, though, for the current quarter and had a large CapEx guide for the year ahead, just like Alphabet on Tuesday. But we'll caution that the first quarter forecast includes a big headwind for the adverse foreign exchange changes, which we don't think should necessarily be held against Amazon. But let's remember, I mean, even with tonight's fairly meaningful pullback, the stock's only giving up about 3 weeks of gains. We'll be thinking about it as a buying opportunity in a few weeks. But I will tell you, like the other Mag 7, it's not where the action is. Finally, travel is the #1 theme in this country. Hotels just won't quit. This morning, Hilton announced a true blowout quarter. Expedia gave you a monster quarter this evening. It's one after another after another. But the best one's American Express. It's the 9th best performer of the year. It fits the bill for 2025 after a fabulous last quarter. Finally, a newbie added to the index, Sherwin-Williams. A little odd here, paint company. This one's it's tough. I don't get it. It's housing slowed, 7% mortgages. I'm honestly shocked the stock's so high. Still, it's not a tech stock. It's not a Mag 7. In fact, it's a quintessential not tech stock. Maybe that's why it's there. Bottom line, so far this year, we've had many very big winners outside of tech, and I bet most of them can keep quietly working their way higher. Let's go to James in Connecticut. James.
Hi, Jim. Thanks for taking my call.
Of course.
Jim, is it too late to buy Banco Santander?
No, Banco Santander is very inexpensive still. Anna Boutine's doing a great job. Now, admittedly, I did like it at 3 and 4. I know I just endlessly pounded the table. But at 5, I still think it's a great situation. Let's go to, my old friend Trey in Texas. Trey.
Jim, I can't believe it's been 5 years and I'm still wearing this darn mask. See, the thing is, when I got my boxer puppy in early 2020, it was love at first sight. But I had no idea his natural gas production would rival that of Exxon. I've had to repaint the walls in my house a few times. But on that note, I know you're bullish on LNG, and since you're the GOAT,
yes,
so am I.
Absolutely.
Question is Exxon the GOAT in the ONG space?
No, it's not. And look, frankly, I'd rather see you in Chevron if you could do that. Sorry about your dog. I wish I had something for the dog. I'm trying to think. I mean, maybe Zoetis has something. Doesn't come to mind. But no, we want to stay away from Exxon, Trey. It's not where the action is. Let's go to David, also in Texas. David.
Jimmy Chill.
Yo.
On behalf of all NFL fans that aren't KC, fly Eagles fly.
You bet. Go Birds. What's up?
All right. So my stocks have been a dog since August. Is there any hope left for Intel?
You know what? Look, Intel does have a very good CFO, now CEO, one of the 2 CEOs. I wouldn't bet with it, and I wouldn't bet against it. I think it is a great institution. but I don't want to be in the stock. All right, now look, this year surprisingly had a lot of winners outside of tech, and the one that we have in the top, well, just Amazon disappointed tonight. But I do think the others can keep winning, and that's where you want to be right now. On Mad Money tonight, shares of gaming stock Roblox fell on some missed estimates and softer than expected guidance. I'm thinking of the decline with the CEO. Then, how could rates and recent natural disasters affect the insurance landscape? I'm learning more from the Hartford's top brass. And later, Elf Beauty is on the move after earnings, but not in the right direction. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.